What if one of the most successful investors of our time isn't merely a numbers person, meticulously crunching figures and chasing returns? What if he's actually a profound thinker whose ideas can illuminate much more than just the stock market?
That's a fascinating question to start with.
Welcome to the deep dive. Today we're pulling back the curtain on a truly remarkable figure, Li Lu. Now, he's a name that resonates with extraordinary investment success, absolutely.
Sure, definitely. Hugely successful.
But to define him solely as a financier would be, well, it would be to miss the deeper, richer currents of his life and thought.
Exactly. There's so much more there.
Are embarking on a deep dive into Li Lu's incredible journey. It's a narrative that intricately weaves together profound personal hardship, unwavering conviction, and just this insatiable intellectual curiosity.
It's quite a tapestry, and this tapestry of experience has shaped a unique philosophical approach, not just to investment, which is what he's famous for, but to the very nature of civilization itself, and even to the enduring complexities of human nature.
Right. He's not simply an investor. He is, in many profound ways, a modern philosopher whose insights offer, I think, a kind of compass for navigating our complex world.
That's a precise way to frame it. Our mission today, really, is to unpack Li Lu's integrator philosophy. We'll meticulously try to reveal how his deeply personal and often, frankly, challenging experiences, his rigorously developed investment principles, and his broad macro-historical understanding of societal evolution, how they all converge.
Into something cohesive.
Exactly, into a remarkably cohesive and powerful worldview. We're going to dissect the core tenets that guide his decisions, showing how they offer not just financial wisdom, but enduring insights for any of us trying to make sense of and maybe thrive in our increasingly complex world.
And this really isn't just for those of you with an avid interest in finance. Far from it.
Not at all.
You'll discover how powerful principles like, say, intellectual honesty, a commitment to continuous learning, robust risk management, and that profoundly long-term thinking, all drawn directly from Li Lu's insights, can apply with surprising force to your own decision-making. Whether you're managing a complex project at work, maybe meticulously planning your career trajectory, or simply striving to be more informed and make better, more resilient choices in your daily life. His framework offers surprisingly practical and powerful tools.
It's broadly applicable, absolutely.
But before we immerse ourselves further, just a quick reminder that all insights shared in this deep dive are for educational purposes only. They do not constitute investment advice.
Right. Critical point.
We strongly encourage you to always conduct your own due diligence and, consult with a qualified professional before making any investment decisions.
Always do your own homework.
Okay. Now, let's begin to unpack this incredible, truly multifaceted story. So, to truly grasp the essence of Li Lu's philosophy, we really have to journey back to his origins. His early life in China wasn't merely challenging. It was, well, forged in the crucible of significant adversity.
That's putting it mildly.
And these experiences, they set a foundational tone for pretty much every intellectual and personal development that followed. It's genuinely hard to fathom the psychological imprint of growing up amidst that kind of instability.
It's more than just difficult, it's transformative. What's absolutely fascinating here is just how profoundly his early experiences reverberate through his later thinking. It's almost like, geological strata shaping a mountain range.
Yeah, you can see the layers.
Exactly. Li Lu was born in Tangshan, China in 1966. And then in 1976, when he was just 10 years old, he survived the devastating Tangshan earthquake.
Which was catastrophic.
Unbelievably so. A catastrophe that not only flattened his city, but claimed hundreds of thousands of lives. Try to imagine the ground literally opening up beneath you, everything familiar disintegrating into chaos.
Unimaginable.
It wasn't just physical survival. It was a profound psychological crucible, an immediate, visceral lesson in the fragility of existence and, well, the sheer unpredictability of the world.
And that experience alone would leave an indelible mark on anyone. But layered on top of that natural disaster was the long shadow of the Cultural Revolution.
Right, and even more, perhaps, insidious form of societal upheaval.
Yeah.
Precisely. His formative years were deeply shaped by this period of intense political and social turmoil. His parents, both intellectuals, were targeted, sent to labor camps, which left him effectively an orphan in a society turned upside down.
Wow.
This wasn't just a challenging childhood. It was a masterclass in uncertainty, in fear, and the absolute necessity of resilience. When you're separated from your primary caregivers at a young age and the very fabric of society is tearing apart around you, well, you learn very quickly about the real consequences of risk.
Not theoretical risk.
Not theoretical at all, not abstract concepts, but lived reality. This kind of upbringing, it just ingrains a deep understanding of survival strategies, both literal and metaphorical, for navigating incredibly complex and dangerous environments.
So these early hardships weren't just events he endured. They were almost like a philosophical education in themselves, weren't they? Cultivating characteristics we see woven into his core principles today.
I think that's exactly right.
How do you think that early understanding of risk and uncertainty, how did it manifest later?
Well, you can almost trace the roots of his future margin of safety principle and his exceptionally long-term thinking right back to these years. It instills an intuitive understanding that fundamental value, whether in life or in business, must possess an inherent resilience. It has to be able to withstand unimaginable shocks.
Because he'd seen them.
He'd lived through them. When you've experienced such profound instability and personal risk at such a young age, it naturally leads to a deeply pragmatic outlook on life. These characteristics, resilience, pragmatism, and early visceral understanding of risk, they became absolutely central to his later philosophy, especially his emphasis on rigorous risk management and a patient, long-term strategy for success, whether in business or, frankly, in life.
That makes a lot of sense. And for you, the listener, maybe think about how early life challenges or significant setbacks in your own journey might have shaped your approach to risk or your problem-solving strategies, maybe even your personal definition of security.
It's a powerful connection. That link between lived experience and the developed wisdom we carry forward, it often shapes us more than we realize.
That level of resilience forged in fire certainly makes sense. But this raw courage, this willingness to stand for deeply held beliefs, it became even more dramatically evident during Tiananmen Square, didn't it?
Oh, absolutely.
This wasn't just about survival anymore. This was about profound conviction, standing up for ideals. Can you walk us through his involvement there, and what were the immediate, terrifying personal stakes of that conviction?
This is a pivotal and, frankly, incredibly brave chapter in Li Lu's life. He played a significant leading role as a student organizer, a passionate participant, and a visible leader in the 1989 Tiananmen Square student protests.
He was right in the thick of it.
Absolutely. He was actively involved in hunger strikes, demonstrating just an unwavering commitment to the ideals of freedom and democracy that were at the heart of the movement. What's particularly symbolic and I think illustrative of his deep conviction is that he even held a marriage ceremony with his then-girlfriend right there at the Heroes Monument during the protests.
Wow, during the protests?
During the protests. This wasn't merely a political act, it was a profoundly personal statement. A public merging of his personal destiny with the broader societal cause, highlighting the depth of his belief and his willingness to make the ultimate commitment, even in the face of, well, grave danger.
That's an almost unimaginable level of dedication and personal risk.
Yeah.
So what were the profound, life-altering consequences of taking such a public and uncompromising stand?
Well, his actions and the leadership he displayed put him in extreme personal peril. Following the brutal crackdown on the protests, he was forced to flee China. He became one of the country's 10 most wanted men.
10 most wanted. That's serious.
Extremely serious. This situation just underscores a profound willingness to act on his beliefs despite immense personal danger. It demonstrates an extraordinary moral courage that, frankly, few of us will ever be called upon to display. His acclaimed book, Moving the Mountain, My Life in China, offers a powerful first-hand window into these pivotal experiences and how they fundamentally shaped his worldview.
It's worth reading then.
Absolutely. From a philosophical standpoint, this period clearly demonstrates a core commitment to societal values, principles of freedom and justice, far beyond any narrow pursuit of financial gain. It speaks to a moral courage that deeply informs his holistic philosophy and a readiness to make profound personal sacrifices for deeply held ideals. It's really a foundational narrative of principled action over self-preservation.
So imagine coming out of that experience, fleeing your home country as a political fugitive, arriving in a new one, the United States, needing to essentially start over with nothing.
Just incredible pressure.
That's exactly what Li Lu did. And what he accomplished next in academia is, well, it's nothing short of remarkable. A testament to sheer intellectual horsepower and determination.
It truly is astounding. Arriving in the United States, his first challenge was just to master English, which is a formidable task in itself for anyone, let alone someone navigating profound trauma and starting from scratch.
Absolutely.
Then he achieved the extraordinary feat of simultaneously earning 3 degrees from Columbia University, a BA in economics, an MBA, and a JD.
All at the same time.
All at the same time. This isn't just about incredible work ethic, though obviously that was there. It highlights his immense intellectual capacity, his insatiable hunger for knowledge, and an almost unbelievable determination to excel in a new cultural and linguistic environment.
It really speaks to a mind that saw learning not as a chore, but as a path to empowerment and understanding.
Exactly.
Triple degrees from an Ivy League university all at once. That alone shows a mind hungry for knowledge and incredibly disciplined. It seems almost impossible. But there was one specific, almost serendipitous moment that truly redirected his path, right? From pure academia or law to the world of value investing.
Absolutely. The aha moment that profoundly shaped his future philosophical and investment framework occurred in 1993. He attended a lecture by Warren Buffett.
The Oracle himself.
The Oracle himself. And that single encounter, a moment many might have just dismissed as just another speaker, it ignited his passion for value investing. It was this moment that provided the intellectual framework for applying his resilient, pragmatic, and deeply analytical mind to the world of finance.
So it all clicked into place.
It seems so. It wasn't just about making money. It was about finding a system, a rational approach that aligned with his worldview, his experiences.
And for you, the listener, this really highlights the transformative power of mentorship or even just a single influential encounter. It shows how one moment, one conversation, maybe one piece of advice can fundamentally redirect your life's trajectory. It can open up entirely new worlds of opportunity and understanding, even after you've already achieved significant academic or professional success.
It really underscores that the most profound learning often happens outside traditional classrooms, doesn't it? In those moments of deep connection with groundbreaking ideas or inspiring people.
Okay, so with that extraordinary personal history as a rich, deeply textured context, let's now turn our attention to the core of Li Lu's investment philosophy. What becomes immediately clear is that this isn't just about picking stocks or chasing market trends.
Not at all.
It's a deeply thought-out approach, fundamentally informed and shaped by his unparalleled life experiences.
Indeed, his philosophy is a direct reflection of his journey. Li Lu's investment philosophy is deeply rooted in the foundational principles of value investing. He was profoundly inspired and, effectively mentored by the teachings of legends like Benjamin Graham.
The father of value investing.
Often considered the father, yes. And his most famous disciples, Warren Buffett and Charlie Munger. His core philosophy, echoing theirs, places an unwavering emphasis on buying companies that are significantly undervalued by the market based on their intrinsic worth.
Right, the actual underlying value.
Exactly. Rather than being swayed by short-term price fluctuations, market hype, or fleeting sentiment. It's about discerning enduring value amidst temporary market noise.
So it's about looking far beneath the surface, isn't it? It's not just what something costs today or what the crowd is paying, but what it's truly fundamentally worth as a business. That requires a different kind of vision.
Exactly. This foundational principle invites you, the listener, to look beyond superficial perceptions and develop a much deeper, more penetrating understanding of underlying value. And really in any context, not just financial markets.
Interesting.
Whether you're evaluating a business, a career opportunity, or even a complex idea, it's a call for rigorous, fundamental analysis that seeks to grasp the true, enduring essence. It's a deliberate rejection of superficiality in favor of deep understanding.
Okay, let's break down these key tenets in more detail because they really showcase how his philosophy extends far beyond mere numbers into a profound framework for decision-making. Starting with deep value investing itself. When we talk about deep value, what specifically does that mean for Li Lu? How does his approach differ from maybe a more superficial search for cheap stocks? Is he just looking for low PE ratios, or is there a far more nuanced process for uncovering truly deep value?
Oh, it's far more nuanced and rigorous than simply scanning for low multiples, although those quantitative metrics are absolutely part of the initial screening, of course.
Sure.
But for Li Lu, deep value isn't merely about those quantitative metrics. It's about a qualitative understanding so profound that he identifies a fundamental mismatch between the market's current perception and the intrinsic reality of a business.
A gap in understanding.
A significant gap. He's often looking for businesses with powerful, durable economic moats, significant competitive advantages that are perhaps misunderstood, maybe temporarily out of favor due to short-term issues, or simply not yet recognized by the broader market.
Finding hidden gems.
Think of it as trying to identify the Ferrari trading at the price of a Ford, not just finding a cheap Ford. This means spending months, sometimes years, doing forensic-level research.
Years.
Sometimes. Not just into the balance sheet, but into the industry structure, the competitive advantages, the management's incentives and integrity, the long-term societal trends that will either support or erode that value.
It sounds exhaustive.
It is. It's truly seeing a business for what it is and what it will be in a decade or more, independent of fleeting market sentiment. That depth of understanding allows him to buy when others are selling in fear because he trusts his own independent assessment of worth.
So Lilu's commitment to deep value investing demands meticulous, almost obsessive research. But even with the best research, the future is never entirely certain, right? How does he account for that inherent unpredictability, that unavoidable uncertainty? That's where a concept like margin of safety, often championed by his mentors, becomes absolutely critical to his approach, isn't it?
It's precisely there that the margin of safety comes into play as a cornerstone of his philosophy.
Yeah.
And it's a concept that's deeply pragmatic and almost defensive in its nature.
Defensive how?
Well, it involves investing at prices considerably, sometimes dramatically, below his estimated intrinsic values. The primary purpose of this margin of safety isn't really to achieve slightly higher returns, though that might happen. It's to protect against permanent capital loss.
Protecting the downside.
Protecting the downside above all else. This cautious approach reflects an acute awareness of the inherent uncertainties of the future, the limitations of human knowledge, and just the potential for things to go wrong. It's a pragmatic defense against the unknown, a buffer against reality, deviating from even the most rigorous analysis. As he famously put it, "In my view, the biggest investment risk is not the volatility of prices, but whether you will suffer a permanent loss of capital."
That's a key distinction.
A huge distinction.
Yeah.
He continues, "Not only is the mere drop in stock prices not risk, but it is an opportunity. Where else do you look for cheap stocks?"
That's power.
It powerfully reframes risk away from mere price volatility, which can be an emotional distraction, to the far more significant threat of permanent capital impairment. It turns market downturns, those moments of widespread panic, into potential opportunities for the rational, prepared investor who understands intrinsic value and has built in that safety net.
That's a complete paradigm shift for how many people think about market risk. It flips the script on fear. But for someone in the thick of a downturn, how does Lilu's principle help them actually act on this, rather than just intellectually agreeing with it? What's the mental discipline involved in seeing panic as opportunity?
Well, it's about having done the rigorous analysis and established that margin of safety before the market's emotional gyrations even begin.
Preparation is key.
Absolutely. The margin of safety isn't just a number on a spreadsheet. It's a deep conviction about a business's intrinsic worth that allows you to stand firm when others are selling in a frenzy. Think of it like knowing the true structural integrity of a building.
Okay.
So when a storm hits, you understand it's the wind and rain that are temporary, not the foundation itself. This pre-analysis transforms reaction into deliberate action based on pre-established facts, not on raw emotion.
And for you, the listener, Lilu's margin of safety isn't just a financial concept. It's really a profound life strategy, isn't it?
It really is.
Think about planning a major project.
Yeah.
What's your margin of safety against unexpected delays, budget overruns, or team challenges? It means not just having a plan A, but understanding your break-even point for resources, maybe building in buffer time, and knowing what your core, indispensable elements are.
Protecting against catastrophic failure.
Exactly. In a career move, it might mean understanding your minimum acceptable salary, your fallback options, and what skills are truly irreplaceable, protecting you from a permanent loss of career capital, so to speak. It's about being prepared for the inevitable curveballs life throws, because Lilu learned early on, perhaps better than most, that the world rarely goes according to plan.
A lesson learned the hard way.
That brings us directly into his emphasis on a long-term perspective. If you're buying, as you said, a Ferrari for the price of a Ford, you're probably not planning to flip it next week, are you?
Definitely not. This isn't about short-term gains at all. He emphasizes the profound power of compounding, not just financially, which is obvious, but in terms of knowledge and effort as well.
Interesting.
And the critical importance of holding investments for extended periods, often decades. This aligns with an understanding that significant value creation simply takes time and patience. something that often runs counter to the fast-paced, instant gratification culture of modern markets.
Yeah, everything feels so short-term now.
It does. His view reflects a macro-historical perspective, seeing market cycles and business growth over decades, even centuries, rather than a reactive, short-term one driven by quarterly reports or daily news headlines. It's about letting the fundamental value grow and compound over time, much like a patient gardener cultivating a forest rather than just harvesting a single crop.
A forest, not a crop. I like that analogy.
He understands that truly great businesses, like great civilizations perhaps, are built over generations.
Okay, so to hold something for that long, through all sorts of market turbulence, you must possess an almost encyclopedic knowledge of what you own. So a thorough business understanding is obviously not just critical, but foundational.
Absolutely foundational. Lailu insists on conducting incredibly in-depth research into a company's operations, its competitive landscape, the industry dynamics, and critically, the quality and integrity of its management.
We'll come back to management.
Yes. But this isn't superficial analysis where you just skim annual reports. It reflects a deep commitment to empirical investigation and rational analysis as the absolute foundation for sound decision-making. He believes you must go beyond superficial numbers and public narratives to truly grasp the underlying business, its strengths, weaknesses, opportunities, and threats, as if you were preparing to buy the entire company outright.
Thinking like an owner.
Exactly. Thinking like an owner. This means understanding everything from their supply chain and customer acquisition costs to their corporate culture and their research and development pipeline, the whole picture.
Which naturally leads to the concept of the circle of competence. That's a phrase often associated with Munger and Buffett, and it seems like a hallmark of intellectually honest investing.
Precisely. This means investing only in areas where one possesses deep, genuine knowledge and understanding. It's a powerful principle that demonstrates profound self-awareness and intellectual humility.
Knowing your limits.
Knowing your limits. Acknowledging the boundaries of one's expertise rather than pretending to be an expert in everything. Lilu stresses this point relentlessly. He says, a competence that has no defined borders cannot be called a true competence.
That's clear.
And he adds, the true insights a person can get in life is still very limited, so correct decision-making must necessarily be confined to your circle of competence. This highlights the absolute necessity of clearly defined boundaries for effective decision-making, both in investing and, frankly, in life. It's about knowing what you don't know and staying rigorously within the areas where your knowledge truly gives you an edge.
Yeah.
This self-imposed discipline prevents fatal errors born of hubris or, incomplete information.
So if you're only investing in what you deeply understand within your clearly defined circle, it makes perfect sense that you might not have a huge number of investments, which leads to a concentrated portfolio rather than broad diversification, right?
Exactly. He firmly believes in focusing on a small number of high-conviction investments. Companies he understands profoundly, often just a handful.
Just a handful. Really?
Often, yes. This isn't about diversification for its own sake, which he argues can often lead to owning businesses you don't fully grasp or where your conviction is actually quite weak.
Owning a little bit of everything.
Right. Instead, it's about maximizing returns from deeply understood, high-quality businesses where you have a genuine analytical edge. Lailu's argument, essentially, is that if you've done your homework, if you have a true margin of safety, and if you're operating within your circle of competence, then concentrating your capital in your very best ideas is the most rational path.
Seems logical, but requires confidence.
Absolutely. Diversification for him beyond a certain point often becomes what Munger called diworsification, a dilution of returns and knowledge. It requires courage, conviction, and an almost religious faith in your own research and analysis.
And finally, it's not just about the business itself or the industry, but the people running it. That brings us to the crucial emphasis on ethical management.
Yes, this is a particularly critical point for Lilu, and one that resonates deeply with his own ethical framework forged in his early life, as we discussed. He places significant, almost paramount emphasis on the ethical conduct, integrity, and trustworthiness of a company's management team. He recognizes that even the most fantastic business model can be completely undermined by poor or dishonest leadership.
People matter.
People matter immensely. The quality of leadership for him is absolutely paramount for long-term success and sustainability, as he puts it. Management always has a big influence on your success, no matter how good or how bad the business is itself.
That's interesting. Even a bad business with great management.
Well, perhaps great management can navigate challenges better or pivot. But he further clarifies, management is always part of the equation of making the company successful. So the quality of management always matters. This underscores the vital human element in business success, arguing that even a great business can be ruined by poor or unethical leadership. He's looking for stewards of capital, individuals who treat shareholder money as if it were their own, with a long-term ethical mindset.
Right. Stewards, not just executives.
Oh, wait.
Okay, these principles aren't just theoretical. Lai Lu has put them into practice with tremendous success, not just once, but repeatedly. What are some illustrative examples that demonstrate the power and effectiveness of his approach in the real world?
His career is really punctuated by incredibly illustrative examples that validate his philosophy. His profoundly successful early investments in companies like BYD, the Chinese electric vehicle manufacturer, stand out.
Ah, yes, BYD. Big one.
Huge one. He identified its potential, its competitive advantages, and its capable management long before it became the global player it is today, holding it for many years as it compounded value.
Incredible foresight.
Similarly, his investments in Russian oil stocks during the 1990s. Now, that was a period of immense political and economic volatility.
Very risky. Perceived wisdom would say.
Extremely risky, according to the market then. Many others were hesitant or fleeing. But his investments there further demonstrate the practical application and effectiveness of his philosophical principles in real-world, often highly uncertain investment scenarios. These weren't lucky bets or speculative gambles. No, they were the direct result of applying his deep value, long-term perspective, thorough business understanding, and rigorous margin of safety approach. He was able to see value and opportunity where others saw only chaos and risk, precisely because he did the deep work and maintained that crucial intellectual honesty.
What's truly remarkable about Li Lu, and what elevates him beyond just a great investor, is that his insights don't stop at the balance sheet, or even at the intricacies of individual businesses. He engages with much broader, more fundamental philosophical themes.
He really does.
His seminal work, Civilization, Modernization, Value Investing in China, really expands this vision into an expansive macro-historical framework.
This book is a profoundly fascinating exploration. It consciously takes a step back from specific companies or even market cycles to look at the immense, slow-moving forces of macro-historical change.
The really big picture.
The really big picture. In it, Li Lu conceptualizes civilization's evolution into three distinct stages. Starting with hunter-gatherer societies, moving through agricultural civilizations, and finally arriving at the modern science-technological era. His exploration of these vast, almost geological macro-historical trends reveals a profound philosophical interest in understanding the long-term forces that truly shape human progress and societal development. He's not just observing history, he's trying to identify its fundamental operating system.
So he's looking at humanity's trajectory, the grand sweep of history, not just a company's quarterly earnings or a nation's GDP for a single year. How does this grand historical view, this understanding of civilizational development, connect back to his very practical investment approach? It seems like quite a leap.
It's deeply intertwined, actually, and it's one of the most compelling aspects of his integrated philosophy. This broad historical perspective directly informs his exceptionally long-term investment horizon.
Oh, okay.
By understanding the fundamental, enduring trends across centuries of human development, he's far better equipped to identify and capitalize on foundational shifts that play out over decades, rather than chasing fleeting fads or reacting to short-term news. He seeks investments that align with the very deep systemic drivers of civilizational progress, those forces that are almost immutable over human timescales.
Like investing in the direction of history itself.
In a way, yes. It allows him to invest in what he calls permanent trends, businesses that are beneficiaries of fundamental human needs and technological advancement, not just temporary market wins.
And speaking of drivers, he also has a distinct and powerful view on what constitutes modernization itself, defining its engine.
He does. Lai Lu posits that modernization, as we understand it, is primarily characterized by sustained and compounding economic growth. And this growth, he argues, isn't accidental or arbitrary. It's driven by the dynamic and synergistic interplay of two core forces, a market economy and modern science.
Market economy and modern science, the twin engines.
Exactly. This is a crucial insight, connecting the abstract concept of societal progress to the tangible, exponential power of compounding, a concept that is very familiar and central to investors. He explicitly states, the whole process of modernization itself is actually a process of compound interest.
So progress speeds up.
It means that progress isn't linear, it accelerates over time, fueled by these two engines constantly reinforcing each other. For you, the listener, understanding these deep systemic drivers can provide an invaluable framework for comprehending global economic shifts and their long-term implications, whether you're looking at industry, technology, or societal development more broadly. It helps you see beyond the daily news cycle to the underlying currents of change that are shaping our collective future, allowing for more informed, long-term strategic thinking in any field.
This brings us to what I find particularly compelling about Li Lu, his epistemological foundations. Now, that's a big phrase.
What is a bit academic sounding, yeah.
But essentially, it refers to his personal roadmap for how he knows what he knows, how he evaluates information, and how he arrives at what he considers truth. It's his knowledge operating system, if you will, and it seems to underpin every decision he makes, whether financial or philosophical.
That's an excellent way to put it. It really is the bedrock of his entire approach. He places a strong, almost uncompromising emphasis on accurate and complete information and a radical intellectual honesty in his investment approach.
Radical honesty.
Yes, this is not merely a preference for him. It's a commitment to truth that he sees as fundamental to effective action. He articulates it beautifully. Investing is about intellectual honesty. You want to know what you know. You want to know mostly what you don't know. That's your probability edge.
Knowing what you don't know gives you an edge. Interesting.
It highlights the critical importance of self-awareness regarding the limits of one's knowledge, recognizing that acknowledging ignorance is actually a strength, not a weakness. He even pushes it further, stating, if you want to hold an opinion, then you must be able to refute it better than the smartest person you can find who disagrees with you.
Wow, that's a high bar.
It's an incredibly high bar. This isn't about winning an argument. It pushes for rigorous critical thinking. It forces you to develop a robust understanding, not just of your own viewpoint, but of all credible opposing arguments as well. It's an almost scientific approach to truth-seeking.
So it's a relentless, almost scientific quest for truth that underpins his work and his life, an unwavering belief in his power.
Absolutely. He deeply resonates with Caltech's motto, "The truth shall make you free." This isn't just a catchy phrase or an academic ideal for him. It's a profound guiding principle that shapes his relentless pursuit of verifiable knowledge.
And this quest mandates continuous learning.
Absolutely. Continuous learning and a constant, deliberate effort to expand one's circle of competence. He views knowledge itself not as a static acquisition, but as something that compounds over time, much like a good investment.
Knowledge compounds.
Yes. He says, when you have the right approach and are doing the right things, you will see that your knowledge accumulates in the same way the economy grows. It's a process of compounding. And even more directly, offering a very practical link to his financial world. Knowledge compounds almost in the same way that your money compounds. In fact, only when your knowledge compounds at a faster pace, your money is safe.
That's a powerful connection. Learn faster to protect your capital.
Precisely. He emphasizes that you want to build knowledge by continually learning. There is not set preparation. This speaks to the dynamic, iterative, and lifelong nature of true understanding. It's a journey rather than a destination.
But not all knowledge is equally useful or reliable, right? He must have incredibly stringent criteria for what constitutes truly valuable and actionable knowledge.
He does indeed. For knowledge to be genuinely useful, he believes it must fulfill several basic, rigorous conditions. First, it must be verifiable, meaning it's supported by logic and facts that you can either directly observe or independently confirm.
Testable.
Testable, yes. Second, it should confer a high degree of explanatory power, helping you understand why things are the way they are, delving into root causes rather than just surface-level symptoms.
Understanding the why.
And thirdly, and crucially, it should be helpful for making predictions, allowing you to anticipate future outcomes with a reasonable degree of confidence. This isn't just about financial data or economic models, it's a holistic approach to understanding the world, applicable to any field where sound judgment and accurate information are paramount. It's about building a robust, self-correcting mental model of reality, constantly testing and refining it against new information.
It's clear his philosophy is deeply intellectual and rational, but it also has a remarkably strong ethical dimension, extending far beyond mere profit or personal gain. This suggests a profound sense of moral responsibility.
This is perhaps the most critical aspect that truly elevates Li Lu beyond a mere investor to a true philosopher, and I'd say public intellectual. He considers it an explicit moral duty to compound knowledge and ability.
A moral duty.
Yes, not just for personal benefit, but for broader societal good. He explicitly states, you should consider it a moral duty to compound your knowledge and ability. This elevates continuous self-improvement to an ethical imperative. It suggests we all have a responsibility to ourselves and to society to grow our understanding, our capabilities, and our wisdom throughout our lives. It's a call to conscious, deliberate self-development.
In this ethical lens, this sense of responsibility extends to his views on business and society as well, creating a cohesive moral framework.
Absolutely. He stresses the paramount importance of ethics in both business and investing, advocating for managing investments with the same profound care and responsibility as if they were someone's life savings or even your own.
Treat it like it's sacred.
Exactly. This speaks to a deep sense of stewardship and a rejection of the idea that financial markets are some kind of amoral space. His views on society emphasize the fundamental importance of trust, which he sees as the bedrock of advanced civilization. He states that the highest form which civilization can reach is a seamless web of deserved trust.
Deserved trust, keyword.
Keyword. Not much procedure, just totally reliable people correctly trusting one another. This is an ideal vision for societal function, where efficiency and harmony arise from earned trust, reducing the need for cumbersome regulations and oversight.
Less friction, more progress.
Precisely. His co-founding of the Asian American Foundation, TAAF, also serves as a concrete, practical reflection of his commitment to addressing social issues and supporting the community, demonstrating his ethical principles in direct action. He also recognizes the enduring nature of human psychology amidst rapid economic and technological change, implying that fundamental human drives, biases, and the need for meaning persist regardless of superficial progress.
Technology changes, people less so.
That seems to be the implication. And he strongly connects economic freedom with individual liberty, stating, without a free man, there is no free market. That's called exploitation. And also, free market never succeeded without free men and free society.
Wow, powerful statements.
They are. They connect economic freedom intrinsically to individual liberty, human dignity, and ethical societal structures. For Li Lu, investment is clearly not a detached, amoral activity. It's deeply interwoven with societal values, moral responsibility, and the active pursuit of a better, more just, and more trusting world.
We've now explored Li Lu's principles in depth, but sometimes the most profound insights come in their most distilled, resonant form. Li Lu is known for some truly powerful quotes that encapsulate his wisdom, offering direct access to his thought process.
He's very quotable.
Very. Let's dive into some of them, beginning with his perspective on risk and opportunity.
Okay. His most defining quote on this subject, the one that truly reorients traditional thinking, is, in my view, the biggest investment risk is not the volatility of prices, but whether you will suffer a permanent loss of capital. Not only is the mere drop in stock prices not risk, but it is an opportunity. Where else do you look for cheap stocks?
That's such a powerful reframing, isn't it? It fundamentally shifts the perception of risk away from the everyday market fluctuations, which can often be emotional and misleading.
The noise.
The noise, exactly. To the core preservation of capital actually losing your money forever. It tells you that if you truly understand intrinsic value, then market downturns aren't something to fear. They're not merely a challenge to endure. Instead, they become rare, invaluable opportunities for the rational, prepared investor to acquire assets at a substantial discount.
If you've done the work.
If you've done the work. This requires a profound mental discipline to separate market noise from business reality. It's about cultivating the emotional fortitude to be greedy when others are fearful, but only after rigorous analysis has provided that essential margin of safety.
It forces you to look beyond the immediate emotional reaction and into the long-term fundamentals. It's a cornerstone of his thinking.
Next, let's look at his profound insights on knowing and not knowing, which ties directly back to his rigorous commitment to intellectual honesty and those epistemological foundations we talked about.
Right. He offers several powerful insights here. First, investing is about intellectual honesty. You want to know what you know. You want to know mostly what you don't know. That's your probability edge.
Knowing what you don't know is the edge.
Exactly. He further clarifies, investing is about predicting the future, and the future is inherently unpredictable. Therefore, the only way you can do better is to assess all the facts and truly know what you know and know what you don't know. That's your probability edge. And importantly, with a touch of humility, everyone has blind spots, and even the brightest people are no exceptions.
Yeah, no one's immune. These quotes really hammer home the profound importance of self-awareness and intellectual humility. It's not just about accumulating information. It's about the honest appraisal of your own knowledge and, crucially, its limitations.
Mm-hmm.
This is absolutely critical for sound decision-making in any complex domain, whether it's finance, leadership, or even personal choices. Acknowledging your blind spots isn't a sign of weakness. It's the very first step to mitigating their potential impact and preventing costly errors. It gives you a much clearer, more realistic map of what you're working with and where the true risks lie.
It creates a true probability edge because you're operating within your defined competence, precisely because you understand its boundaries. You're not straying into territory where you're likely to make mistakes.
Another fundamental principle he often emphasizes is on investment as ownership. This goes far beyond just buying a stock ticker symbol.
Right. He advises, you have to think of yourself as an owner of a business, rather than an owner of a piece of paper. And further, making it even more explicit, don't think of yourself as a security owner, but a business owner when investing in stocks.
This perspective encourages a much deeper, more engaged, and fundamentally long-term commitment to what one invests in. It fosters a genuine sense of stewardship over a piece of a real enterprise.
Real people, real products.
Exactly. With real employees, real products, and real customers, rather than just treating a stock certificate as a speculative trading vehicle. It shifts the mindset from gambling or short-term speculation to responsible, engaged ownership, where you're thinking like a partner, not just a day trader.
And that focus naturally aligns your interests with the long-term health and success of the underlying business.
It instills a sense of accountability and a focus on long-term value creation that is often missing in the fast-paced world of market trading. Lilu also speaks extensively and passionately about continuous learning and self-discovery, tying it deeply into the entire investment process, almost making learning itself an investment strategy.
He really does. He observes, the game of investing is a process of discovering who you are, what you're interested in, what you're good at, what you love to do, then magnifying that until you gain a sizable edge over all the other people.
Investing is self-discovery. That's fascinating.
Isn't it? He adds, when you have the right approach and are doing the right things, you will see that your knowledge accumulates in the same way the economy grows. It's a process of compounding. And profoundly, you want to build knowledge by continually learning. There is not set preparation.
No endpoint to learning.
Never. He also says, the game of investment is really continuous learning. Further emphasizing this point, tremendous insight is built from intense curiosity and study for your whole life. And offering practical advice, start by learning from the best listening, studying, and reading. Finally, a powerful summation. Investing is about being a good learner. The best investors are those who constantly learn and refine their understanding.
Wow. What these powerful quotes highlight is how learning itself is not just an activity, but a compounding asset, critical for success not just in finance, but in every aspect of life. True mastery and achieving that sizable edge come not from a fixed educational path, but from a lifelong, relentless commitment to curiosity, deep study, and continuous self-reflection.
It's about building that formidable knowledge base that constantly grows exponentially, creating an ever-expanding circle of competence.
It really means the journey of learning never truly ends. It just deepens.
And that deepened knowledge translates directly into better decision-making and a more robust understanding of the world. It's the ultimate competitive advantage, perhaps.
Moving to his broader societal views, Li Lu has a particularly profound and aspirational quote on trust in society, painting a picture of an ideal civilization.
Yes, he says, the highest form which civilization can reach is a seamless web of deserved trust. Not much procedure, just totally reliable people correctly trusting one another.
A seamless web of deserved trust. That unpacks an incredibly powerful and ideal vision of society, doesn't it? One built not on endless layers of rules, regulations, and enforcement mechanisms, but on foundational trust and reliability.
It's almost utopian, but grounded in practicality.
It emphasizes that in any system, economic, social, or political, true effectiveness, efficiency, and harmony spring from individuals and institutions being genuinely trustworthy and earning that trust. Imagine the sheer reduction in friction, the increase in velocity, if trust were truly pervasive and deserved.
It speaks to a fundamental human need for reliability in our interactions. It's a powerful aspiration for human interaction and societal organization, suggesting that trust is the ultimate social capital.
We have a few more notable quotes that really underscore different yet equally insightful facets of his wisdom. offering quick but deep glimpses into his comprehensive worldview.
Okay. He has a deep recognition of history and the shoulders upon which we stand, stating, "Whatever you are is because of what your ancestors have done."
Acknowledging our roots.
Exactly. It underlines a profound awareness of history, heritage, and the cumulative impact of past generations, reminding us that we are products of a long, evolving lineage.
And on intelligent risk-taking, which is so central to his investment philosophy, he offers, if you are wrong, you won't lose a lot, but if you are right, you're going to make a lot.
Classic asymmetric payoff.
Right. This speaks directly to the concept of asymmetric risk-reward, a cornerstone of intelligent decision-making, where the downside is strictly limited, but the upside potential is truly substantial. It's about making bets where the odds are profoundly in your favor if your analysis is correct.
He also champions patience combined with decisive action, observing, "You may very well work extremely hard and seldom score, but occasionally, very occasionally, you get one or two great chances and you make decisive strikes that really matter."
Wait for the fat pitch.
Exactly. This resonates deeply with the idea of focused, high-conviction efforts rather than constant diffuse activity. It's about the discipline to wait, to observe, and then to act with conviction when a truly great asymmetric opportunity presents itself, rather than settling for mediocre ideas.
That brings to mind the importance of aligning passion with skill, something he touches upon with. The easiest way to succeed is to be passionate about something and good at it.
Absolutely. This emphasizes the profound power of aligning one's work and efforts with innate strengths and genuine interests, suggesting that intrinsic motivation amplifies ability and leads to sustained excellence.
Makes sense. Find what you love and are good at.
He also provides a classic value investing adage about emotional discipline and rational decision-making amidst market sentiment. Let Mr. Market be your servant, not your master.
A reminder not to get caught up in the mania or the panic.
Exactly. It's a powerful reminder to not be swayed by the irrational exuberance or crushing pessimism of the market, but to use its fluctuations to your advantage as a rational, long-term investor.
Finally, his strong ethical and philosophical definition of a truly free market, connecting it inextricably to individual liberty, comes through in. With free market and free man, if you remove one of them, it is not called capitalism in my dictionary.
That is a powerful and very clear statement. It unequivocally connects economic freedom intrinsically to individual liberty and ethical societal structures. For him, true capitalism, true progress requires both. One cannot exist meaningfully without the other. It's a definition that foregrounds human dignity within economic systems.
So after all this discussion, what we've seen makes it abundantly clear that Li Lu's approach isn't merely a collection of disparate ideas or a set of clever tactics. It's a meticulously constructed, deeply integrated framework, where his investment principles are fundamentally connected to and derived from his broader philosophy of life and civilization.
That's the absolute crux of it. This interconnectedness demonstrates a coherent philosophical system where principles in one area deeply inform his approach in others. For example, his exceptionally long-term thinking in investment directly mirrors his understanding of civilizational progress as a long-term compounding phenomenon.
The micro reflects the macro.
Precisely. He doesn't just apply patience to a stock, he applies it to the very arc of human development itself. Similarly, his laser focus on intellectual honesty and continuous learning in investment aligns seamlessly with his broader epistemological views on the pursuit of truth as a lifelong moral endeavor.
And the margin of safety, which is so critical in finance, also have that broader, almost existential application in his worldview, doesn't it? From his early life experiences.
It does, profoundly so. His principle of a margin of safety reflects a deeply pragmatic and risk-aware approach, not just to investment, but to navigating life's inherent uncertainties. This cautious stance was undeniably shaped by his early experiences of unimaginable hardship and risk, from the earthquake to the Cultural Revolution.
Built-in caution.
Right. It's about building in buffers, not just against financial loss, but against life's inevitable curveballs, ensuring resilience in the face of the unpredictable. Furthermore, the ethical considerations he brings to investment are entirely consistent with his broader emphasis on moral responsibility, human dignity, and the importance of trust within society. He simply doesn't compartmentalize finance as separate from ethics.
They aren't separate buckets for him.
Not at all. They are two sides of the same coin. His investment philosophy is clearly not just a set of financial rules, but fundamentally connected to his profound understanding of the world, human nature, and societal progress. It's really a testament to a mind that consistently seeks universal, enduring principles.
This integrated perspective, this grand synthesis, is perhaps best captured in his significant work, Civilization, Modernization, Value Investing in China. Let's take a deeper look at that ambitious and unique book.
This book truly is a monumental intellectual endeavor. It seeks to synthesize historical analysis, economic theory, and his developed investment philosophy into a cohesive, sweeping framework for understanding the modern world, particularly, as the title suggests, through the lens of China's unique developmental trajectory.
Bringing it all together.
Yes. The book explores the intricate, dynamic relationship between China's modernization process and the principles of value investing, suggesting, as we discussed earlier, that modernization itself can be viewed as a form of compound interest, a continuous, accelerating growth fueled by the synergy of market economies and modern science. It's a fascinating reinterpretation of macroeconomics through a value investor's eyes.
So it sounds like it provides a macro lens through which to understand not just China, but contemporary global issues and the forces shaping the 21st century.
Exactly. By outlining those three distinct stages of civilization, hunter-gatherer, agricultural, and modern science technological, Li Lu provides an expansive historical context for understanding contemporary societal challenges and opportunities. He also offers a nuanced critique of the traditional distinction between real and virtual economies in advanced stages of development, arguing for their fundamental interconnectedness.
Challenging conventional thinking.
He does. Furthermore, he examines the evolving role of government in modernized economies, proposing a dynamic relationship between state and market. What's truly unique and compelling about this book is that while it's not a work of traditional academic philosophy in, say, the Western sense, it offers a profoundly insightful perspective.
How so?
It's informed by his deep and often harrowing personal experiences in both China and the West. It applies philosophical principles to the practical realms of finance and economics while engaging with significant historical, societal, and geopolitical trends. This integrative approach, bridging East and West, theory and practice, personal and global, marks it as a truly noteworthy and original contribution to modern philosophical discourse.
So after this extensive deep dive into his life, his investment principles, and his broader worldview, we can confidently return to our opening question and definitively ask, why is Li Lu a modern philosopher?
Well, his life and work unequivocally demonstrate a profound and relentless engagement with philosophical questions that extend far beyond the narrow realm of investment. He grapples with fundamental questions of value, what is truly valuable and enduring. Knowledge, how do we know what we know, what are its limits, and how do we acquire it ethically? And progress. How does civilization advance, what drives it, and what are our responsibilities within it? His emphasis on rationality, long-term thinking, intellectual honesty, and ethical conduct provides a robust, self-consistent framework for navigating the complexities of both the financial world and broader life.
A framework for living, almost.
In many ways, yes. His unique perspective on civilization and modernization, particularly as it relates to China's remarkable trajectory, offers invaluable insights into the forces shaping our contemporary world. These are not merely financial tactics, they are articulations of enduring wisdom, woven into a comprehensive system through his writings, speeches, and the example of his life, offering, I think, a powerful compass for a rapidly changing, interconnected global society.
This has been an incredible deep dive into the mind and journey of a truly extraordinary individual. Li Lu's trajectory from childhood hardship and political activism to academic excellence and immense investment success is just inextricably linked to his deep integrated philosophy.
It really is.
It's a philosophy built on resilience, a relentless pursuit of truth, unwavering intellectual honesty, and a profound ethical grounding that informs every decision he makes.
It's a powerful testament to the impact of a deeply considered worldview, where personal experience and intellectual rigor combine to form a profound wisdom. His principles, whether it's diligently seeking intrinsic value in a business, applying a robust margin of safety against uncertainty, committing to continuous compounding learning, or understanding the long-term effects of societal progress, can empower you.
The listener.
Exactly. You, the listener. These aren't just investment rules. They are powerful tools for critical thinking, ethical decision-making, and navigating complexity in any aspect of your life. They provide a framework for discerning what truly matters and acting with conviction.
And as we wrap up this deep dive, Li Lu asks us to consider the deepest forms of value, moving beyond the superficial. So as you move forward into your own endeavors, maybe consider this. What truly constitutes value in the decisions you make and the knowledge you acquire?
A challenging question.
How can you apply that rigorous intellectual honesty to identify not just what you know, but maybe more importantly, what you don't know, thereby creating your own unique probability edge? And how can you personally contribute to building Li Lu's vision of a seamless web of deserved trust in your own spheres, laying a robust foundation for long-term progress?
Lots to think about there.
Definitely. Thank you for joining us on the Deep Dive.